So you've been pre-approved. Congratulations. Super exciting. And now you're at the stage where you're looking at the loan proposal, and you're also looking at the loan estimate and all the interest rates. And you're just wondering, what does all this mean? How does I get this interest rate? How do they even come up with what rate I get and what there's cost associated with the interest rate? I didn't know that. And you're just kind of overwhelmed throughout just thinking, gosh, I want a low rate, but I don't even know how the rates are calculated. You may know me as your mortgage advisor, Amy Debusk, and I want to talk to you about how we come up with the interest rates. So all banks get pulled from the same pool of interest rates, and there's different products associated with the different interest rates available. So there's three things that really go into the main portion of what interest rate you get. Number one is your credit score. So the higher your credit score is, the lower your interest rate is going to be. And there is a grid for the credit scores that all banks follow. Typically, the highest in credit score that we give merit to in the banking world or mortgage world is a 780 credit score. Now, that's one. So credit matters. Number two is down payment. So if you're putting a low down payment down, you're typically going to get a little higher of an interest rate. And if you put less than 20% down, we have to contend with what's called private mortgage insurance. That's the insurance policy that the banks take out in the event that you default on the loan, and you pay for that insurance. So number two is down payment. And then number three is a big one. It's what loan product are you getting? Are you going to do an FHA loan, or are you going to do a conventional loan? Now, not everybody gets to choose. Some people only qualify for an FHA loan, and sometimes people qualify for both. However, maybe the house that you found requires a conventional loan, so you can't even choose to do an FHA loan. However, in general, FHA loans have a lower interest rate. However, they have private mortgage insurance that's charged upfront, tacked onto the back of the loan, which is 1.75 of the loan amount. And they also charge a monthly mortgage insurance premium. Conventional loans only have monthly mortgage insurance premiums. So a lot of times a conventional loan will make more sense if you qualify for that, because you won't have that 1.75% fee that's tacked onto the back of the loan. So you won't owe as much with a conventional loan. Even though the interest rate is a little less on that FHA loan, it usually doesn't pan out. So let's talk about the interest rates. So every single day, our bank gets all the interest rates for every single loan product we offer. And if I pull up a conventional loan, putting 3% down, a lot of first-time home buyers opt for a lower down payment, then I'm going to get probably about 15 different interest rates associated with that product. And there's always going to be a middle ground. So the middle interest rate is going to be what we call par pricing, meaning there's very little cost associated with that interest rate. So what you want to remember is that the interest rates get lower when you pay more upfront inside your closing costs. That's cash out of pocket that you have to come up with. And then the interest rates get higher the lower the cost, the lower the amount of money that you're going to be coming up with at the close of escrow right before you get your keys to your house. So there is a sweet spot for interest rates. There's about 3 or 4 interest rates for every product on a daily basis that make financial sense. And in our proposal and our meeting that we do a deep dive on the interest rates right when you get into contract, we'll go through the interest rates again, and we'll also do a analysis on how to recoup that money and what interest rate makes the most sense for you. I just wanted to give you this information in hopes that it would give you a little better understanding of how the interest rate is derived. If you have any questions at all, you can click the link above to book a 15-minute appointment.